morning, everybody. I am pleased to welcome Joelle Faulkner from Area 1 Farms with me on today's call. Good morning, Joelle.
Good morning. Thanks so much for having me.
Yeah, we've been working with you and your firm for a number of years, and I thought today would be an excellent opportunity to get an update on Area 1 as well as an update on Joelle. So first off, quick word about your summer. How was your summer? Where did you go? Anything great you can share?
It was lovely. The weather was really nice. As somebody just enjoying summer, we live in Toronto. We stayed here most of the time. I went for 4 days to Iceland with just my
Nice.
husband and no children, which was lovely.
Yeah.
And that was kind of it.
Awesome. I got to go to Ottawa with my family, my parents. I hadn't been to Ottawa since I was in high school. And I mean, for us in Edmonton to get to Ottawa, it's a bit of a
Yep.
trek. Not so much for you, but what a beautiful city.
Yeah.
For clients that haven't been to Ottawa, it's a must-see city, especially in July is when we went. It was amazing.
That's awesome. Did you get for Canada Day or no?
Yeah, Canada Day.
Oh, that's amazing.
Yeah.
Oh, that must have been so good.
It was so good. Yeah, so good. Except one quick story, and then we'll get to the investing bits. But we were told about where to go to see the fireworks.
Yep.
And we talked to a bunch of locals. Yeah, go to this river spot and this particular ledge. The fireworks are shot next to the Parliament buildings. It's you're gonna love it. So we get there with parents and kids, and the fireworks were on another side of Ottawa. Like we could only see them as they like faded on the tops of these buildings, and it was too far for us to get. So super important to get the facts right before you
Oh,
get
that's
down there for
rough.
the fireworks.
Did you go whitewater rafting? I heard it's
No,
really good, actually.
no, no, I
Okay.
didn't do that. But we did do the Bunker. Have you been to the Bunker when you were there?
No.
Okay, so the when Baker was prime minister, they had a Cold War bunker made. It's an amazing museum
That's amazing.
to go and check out. Yeah.
Okay, I will do
Oh,
that.
okay. Let's talk about farm investing. Okay, we added Joelle's from Area 1 into our portfolio a number of years ago. I'm going to say maybe 5 or 6 years ago. Joelle, can you give us a 1 or 2 minute overview about who your firm is and what you are doing in the farm investment space here in our country?
Yeah, absolutely. So Area 1 Farms invests in farmland in partnership with farmers. Our view is that farmland is a low volatility, high return asset, and that it's best invested in with farmers who know the area and the opportunities and the neighbors and who can kind of get access to the right opportunities at the right prices. But the overall view on farmland is that most people think about it as kind of global demand for food is rising, and as and land base is staying the same or decreasing because of urbanization and degradation. But that actually, and so prices should rise. And we don't so much believe in prices rising. Like we think generally commodities will follow inflation. But we do think, because of the data, that farmland has gotten more productive every year. So 2 to 3% more physical yield per acre in Canada for the last 50 years. And it's gotten more profitable because we keep introducing higher value crops. And so because of both of those things, we're really comfortable that farmland will kind of incrementally increase in value. That number has been about 10% over the last 20 years. We think kind of 7% plus is probably sustainable. And so between that and some income from operations, and then we do a bunch of reclamation work where we bring land back into production that has fallen out of use. With all those things, we aim to give investors an 8 to 12% net return.
Very good. So that's the expected return. Obviously, it's not a guaranteed return. We've added it into the portfolio because we are big believers in real asset investing. Just to remind our clients, this is not an alternative investment. We consider this a real investment in the real asset section of the portfolio. It's complicated. We can't just go out on our own and roll up with with our sedans and try to buy farms on our own. We need to partner with firms like Joelle's to diversify, and that's why we have client assets in Fund 4 and in Fund 5. So, Joelle, tell me about Fund 4. Where are we at in the timeline of the fund, and how is it going?
Sure. So Fund 4 had its final close in February of 2022. We have called all of the capital that we intend to call, and it's going really, really well. At this point in the fund's life, we actually wouldn't expect much in the way of gains, but we've had really strong returns in this fund. It was it's marking to a 7.2% net IRR as of June 30th. Which is way above like where you'd expect, just because we haven't done any of that reclamation or very much of that reclamation work yet.
And that's from inception?
That's from inception. Yeah, exactly. Okay. And so really, really happy with that performance. The farmers are really good. The operations are going well. We had one farm that we were having some trouble with that we turned around. It's now been 3 years of kind of the highest return of the portfolio. So nice. Just yeah, it's really good. Like, it's been neat. It's the first fund where I had what we call operations directors, so on the ground experts helping me with diligence and investment, and then overseeing the operations. And they are all 40 years in ag in some way, often also farm on the side. And that's been invaluable. Like, it's just created really great farms.
How many farms are in that fund?
As of now, 24.
Okay. Primarily Ontario moving west?
Primarily Ontario, Manitoba, Alberta. Okay. About a third. Ontario's a little less than a third.
Yeah, and remind us why Saskatchewan isn't in the mix there.
So Saskatchewan, actually, and Manitoba have land ownership restrictions that don't allow for any non-Canadian beneficiaries, which also means you can't have any of the pension plans unless you have exemptions. In Manitoba, we've worked really closely with the board that adjudicates those exemptions to make sure that the opportunities we bring forward in Manitoba are of benefit to the province, which is how it's adjudicated. But Saskatchewan has a little bit of a more difficult history, and their board is just a little bit more war-torn with kind of having given exemptions to things that probably shouldn't have. And so we haven't managed to work well with them. We just haven't managed to work with them.
So Joelle, they're wanting to like keep ownership of Saskatchewan farms in Saskatchewan, right? Is that the
They want to keep ownership of Saskatchewan farms with farmers, which we actually totally respect, as does Manitoba. But in their case, you have to apply if you have any pension plan or institutional owner, and we do. And the board just hasn't wanted to make a decision. Like, they're a little overwhelmed. They've been it's kind of like once bitten, twice shy. Like, they're just a little touchy on the whole thing. And we aren't, our view is that we want to work in places where we are legally allowed and where we're desired. Like, we're a desired addition to the agricultural economy, and we don't feel desired there.
Right. What's in terms of the timeline of Fund 4, where are we at with the ability to wind up investments for clients that are going to choose to do that?
So that happens 10 years after final close. So in Fund 4, that's 2032. So the end of 2029 will come to you for a decision about whether you want to keep going or wind up. In between, if you ever need to sell or want to sell, we can usually find buyers. But that's the current timeline.
Okay. So Fund 5 now is alive. You're raising capital, I believe, still for Fund 5?
Yeah, that's right. So we're raising capital through this year and then probably through all of 2026. It's aiming to be a $500 million fund. It's $140 million raised to date.
Okay, excellent. So with all of our new clients that have come on in the last few quarters, they've been coming into Fund 5. Same sort of institutional partnerships that were established in other funds with Fund 5 as well?
Yeah, exactly. So Fund 3, 4, and 5, the cornerstone investor has been Sun Life for their general account. Um, and they've been really delightful to work with. And this is really an institutional product. As you know, it has very few individuals because we don't take anybody directly. So it's
Mhm.
only through a couple wealth managers like yourself that are really looking for something that's kind of low risk and inflation protection and kind of institutional quality.
Very good. Um, so the diversification of Fund 4 is going to be mirrored in Fund 5. Are you able to talk about like the goal for the amount of farms that you're wanting to purchase at a
Oh
at a
yeah.
$500 million?
So we're aiming for about 35. So Fund 4 was 300 million, just over 300 million. And so in a $500 million fund, it'll be probably around kind of 30 to 40. We kind of expect 35 farms.
Mhm.
Those are a combination. Some of them are what we call full farm partnerships. So the farmer puts in their whole farm and we add capital to buy out landlords. Some of them, the farmer has their main farm outside of our partnership, and then we partner on just additional pieces of land. And so
Okay.
there's differences in terms of like the full farm partnerships tend to get bigger just because we own more of it. We also own the
Mhm.
equipment and infrastructure. So those tend to be a little bigger. And then we do a lot of land improvement. So we reclaim acres. Do a lot of that work in Western Manitoba, a little bit right now in Northern Alberta, and then a bunch in Northern Ontario. And Fund 5 has started being like, in terms of just where it is, because it's still a growing fund, it's overweight in Ontario because
Yeah,
we are doing more of that cleanup work.
got it. Let's talk a little bit about I guess, the world of politics and tariffs. From your perspective, what have you been noticing on the tariffs from the United States and how it's impacting farms and potential profitability?
Uh, the tariffs haven't had a big impact, with a bit of a caveat. But the U.S. tariffs, so commodities or crop commodities are within the USMCA. And as a result, the tariffs only existed for 2 single days, one in February, one in March. And in neither of those days did actually the crop values take a hit. So people
Okay.
didn't seem very concerned about it. On the other hand, China has put a tariff on canola oil. We don't send them much canola oil. Um, but they also put a tariff on, like after that, on canola seed and on peas. We send them a lot of canola seed and actually a lot of peas. And so the prices there went down initially. They kind of came back up, but there's a pretty good global crop. And there's no better way to lower commodity prices than to have a really good commodity
Yeah.
crop globally. And so commodity prices have moved as of when we were writing reports, which was only a couple months ago. Commodity prices were at their 10-year average. They've now moved below that in a number of cases. Um, and it's just a supply and demand. So a
Mhm.
worse year will bring things up, a better year brings things down. And in those years, tariffs are pretty effective at kind of keeping them a bit lower. China, which has tariffs on, or import bans essentially, but tariffs on a number of the US crop, also won't take those commodities from Canada, I don't think, just
Okay.
because with the USMCA, they can cross into Canada, so it would be kind of a side door. And that again, it doesn't matter much for those commodities like soybeans because Canada doesn't produce a lot of those for export, but it
Mhm.
lowers the overall desirability of the crop locally, and so it kind of puts downward pressure.
Yeah. Yeah, that makes sense. Talk to me a little bit about what we're seeing with rainfall. Is the drought conditions in a lot of what I think of central Canada, is that impacting the farms that we own in these funds?
Yeah, absolutely. So there was drought primarily through most of July, through most of, or a fair bit of Canada. So we
Mhm.
see slightly lower yields than we were expecting, maybe not expecting, hoping for in Northern Ontario. We definitely see lower yields, particularly across wheat in a fair bit of Manitoba, and the same in Alberta. The the crop overall in Canada, given the amount of rainfall and given the timing of that rainfall, is way better than people would have expected. So
Yeah. Okay.
everybody has a worse crop than they wanted. Most people have a worse crop than they kind of went into the year expecting. They have a better crop than what you expected when you were kind of looking at that drought and seeing what it was doing to things. So things have filled better. There's better volumes. Unfortunately, because the drought was right in the growing season and most people didn't have that much sold ahead of that, it was pretty scary to sell a crop you didn't know if you were going to make. So there's a little bit of a double whammy, which is you have this smaller crop, but you also have it less sold because you were really worried about how much of that crop was coming off. So even though it performed a bit better, you're in a tricky commodity market.
Yeah.
The reason none of that keeps me up in particular is we run really long funds and we run it from the view that income needs to do something. It is an important contributor to our overall return, but it is not the most significant piece of our return.
Yeah.
Crop insurance covers us, which is a Canadian subsidized program at the farm level, covers us from any real losses from crop production. And on the ups, so while it won't contribute like a lot of cash in this particular year, land has continued to appreciate. The yields have actually been reasonably strong from that kind of historic, like if it can yield this well in drought, it's a pretty good sign perspective. And we continue to see innovation in all kinds of farming that is making land more profitable overall.
Yeah. And if we're expecting, 9-10% return on this particular asset, there has to be risk. Otherwise, it would be returning like a GIC return. So these are not lines that go straight up and smooth. There has to be bumps.
That's right.
Okay.
Yep.
Yeah, that's good. Joelle, thanks for the update. I really appreciate it. Looking forward to seeing Fund 5 develop and get close to the $500 million. And I know our clients will be doing our part as we continue to diversify. Thank you very much for your updates.
Thanks so much for having me, and thanks for continuing to believe in what we do and support the farmers we work with.